It's Tuesday. President's Day is winding down. Most Americans are finishing dinner, watching television, getting ready for bed, completely unaware of what's unfolding right now in the silver markets. Because while America relaxes, the groundwork for Tuesday is being laid. Tonight, over the next several hours, the pieces are being arranged on the board. While you're not paying attention, I'm detecting signals in Asian order flow that suggest tomorrow could be explosive, in either direction. The same patterns that preceded the February 12th flash crash, the same positioning mechanics that enable gap openings, the same thin liquidity conditions that allow engineered price moves. Something is being constructed tonight for Tuesday. And if you're not prepared, you could wake up to a market that's already moved without you. Before we dissect exactly what's taking place tonight and how to prepare for Tuesday, clear as always, I will never ask you for money. No paid groups, no courses, no signal services. If anyone uses my name to sell you anything, it's a fraud. Report it immediately. I produce these videos because overnight setups dictate the next day's battlefield. This is education, not financial advice. Verify everything. Leave a comment if you're watching tonight while the rest of the world sleeps. Let me walk you through precisely what happens tonight and why it's consequential for Tuesday. CME GlobeX reopens at 6 p.m. Eastern tonight, approximately 3 hours from now as I record this. After a full President's Day of abbreviated trading and complete shutdown, futures markets come back online. But before American futures reopen, Asian markets move first. Singapore opens while you're eating dinner. Hong Kong opens while you're watching the evening news. Shanghai opens while you're asleep. By the time you wake up Tuesday morning, Asia has already determined the direction. Here's what most Americans fail to realize. The overnight session, from 6 p.m. Eastern to 8:30 a.m. Eastern, accounts for roughly 35% of daily volume. 1/3 of the trading occurs while America sleeps. And it's not random activity. It's deliberate positioning. Institutional money positioning for Tuesday's regular session. The institutions understand that retail checks prices in the morning. They know retail makes decisions after seeing the open, so they position overnight to shape what retail encounters at 9 a.m. Want higher prices Tuesday? Bid up the overnight session. Build momentum. Retail wakes up, sees green candles, buys, adding fuel to the institutional position. Want lower prices? Tuesday, sell into the overnight session, create anxiety. Retail wakes up, sees red, panic, sells. Institutions scoop up the panic selling. Tonight's overnight session is where Tuesday's story gets authored. The question is, what story are they writing? The signals I'm tracking. Let me walk you through the specific signals I'm monitoring tonight because these reveal which direction Tuesday is likely heading. Signal 1, Shanghai premium direction. The current Shanghai premium stands at $11 above the New York price, approximately $86.50 versus $76.50. If Shanghai opens tonight and the premium widens toward $12 to $13, that's aggressive Eastern buying with physical demand intensifying, a bullish indicator for Tuesday. If Shanghai opens and the premium narrows toward $9 or $10, some pressure is easing with physical demand moderating slightly, less bullish urgency. The premium direction tells you whether Asian industrial buyers are acting with urgency or patience. Urgent buyers push prices higher globally. Signal 2, the GlobeX opening gap. When CME GlobeX opens at 6 p.m. Eastern, observe the first trade relative to Friday's close and today's abbreviated session close. A gap above 77.50 is bullish. Asian buying is already driving prices up, and Tuesday likely continues higher. A gap below $76 is bearish, selling pressure carrying over from today's thin liquidity, and Tuesday could probe lower levels. A flat open around $76.50, $77 means the market is undecided. Tuesday's direction will be determined by early session activity. The gap reveals what transpired between sessions. It exposes positioning that occurred while U.S. markets were dark. Signal 3, dollar index movement. DXY closed today around 97.0, an elevated level creating resistance for commodities. If DXY softens overnight toward 96.50, dollar selling supports commodity buying, bullish for silver. If DXY firms toward 97.50, dollar strength weighs on commodities, bearish for silver. Currency movements frequently lead commodity movements. Treat DXY as a leading indicator. Signal 4, gold correlation. Gold is currently trading around 4,950, consolidating below the $5,000 psychological barrier. If gold breaks above $5,000 tonight, silver follows with amplified movement, typically 2-3 times gold's percentage move. That's a bullish signal. If gold drops below $4,900, silver follows downward with similar amplification, a bearish signal. Gold often leads silver. Watch the senior metal for directional clues. Signal 5, volume profile. Normal overnight volume runs between 15,000 and 20,000 contracts. If tonight's volume exceeds 30,000 contracts, something meaningful is occurring. Large-scale positioning is underway, and the move carries weight. If volume remains below 15,000, the positioning is quiet, and Tuesday's direction is less certain from overnight activity alone. Elevated volume validates direction. Low volume suggests the signals could be misleading. Let me remind you what the setup looked like before the February 12th flash crash, because I'm observing parallels tonight. Sunday, February 9th, quiet weekend. Silver around $95. No unusual activity. Monday, February 10th, normal trading. Then at 5:15 p.m. Eastern, the CME announces an 18% margin increase after hours while retail wasn't watching. Tuesday, February 11th, retail wakes up to margin calls. Liquidations commence. Price declines to $91. Wednesday, February 12th. At 8:47 a.m., coordinated selling hits. Flash crash to $17.47. The pattern, set up on Sunday and Monday, execution on Wednesday. Where are we now? Sunday, February 15th. Quiet weekend. Monday, February 16th. President's Day, thin liquidity. Price pushed to $76.50, testing the February 12th lows. Tonight, Asian session positioning. Tuesday, February 17th. The first full, normal trading session since the flash crash support test. The setup mirrors the February 12th sequence. That doesn't guarantee a repeat, but the similarity demands attention. Watch for CME announcements tonight, any margin adjustments, any unusual advisories. The February 10th announcement arrived at 5:15 p.m. Central. That's 6:15 p.m. Eastern, right after GlobeX opens. If the CME publishes anything out of the ordinary tonight, treat that as a red alert for Tuesday, the $76 line in the sand. Today's abbreviated session tested $76 support. Let me explain why tonight's and Tuesday's activity around this level carries enormous significance. $76 is the February 12th flash crash low, the level where massive selling finally exhausted itself, where buyers emerged with enough size to absorb the cascade where the bottom was formed. Today, in thin President's Day liquidity, price dropped to $76.34, probing that support for weakness. The support held, barely, but it held. Tonight's Asian session will test $76 again. The question? Does it hold or give way? If $76 holds through tonight, that constitutes a triple bottom confirmation, an extremely bullish technical pattern. Short-term traders begin covering their shorts because they don't want to be positioned below confirmed support. Momentum shifts bullish. Tuesday could gap towards $78 to $80. If $76 breaks tonight, that's a support failure with significant technical damage. Stop losses positioned below $76 get triggered. Cascade selling begins. The next support sits at $72 with potential for a Tuesday gap down to test that level. The $76 level presents a binary outcome tonight, hold or break. Tuesday's entire path depends on which result occurs. This is why I'm urging you to watch tonight, not Tuesday morning, when the outcome is already determined. Tonight is when the decision is being made. This is the single most important thing to check before you go to sleep. CME Group advisory notices. The February 10th margin increase was published at 5:15 p.m. Central, right after markets closed, while retail was logging off for the day. By the time retail discovered the announcement Wednesday morning, they were already in margin violation. Liquidations were already underway. The trap had already been sprung. Tonight carries the identical risk. What to watch for? Margin requirement changes. Any increase effective Tuesday would compel retail to post additional capital immediately, the same tool used on February 10th. Position limit changes. Any reduction in maximum positions would force large longs to liquidate, creating selling pressure. Delivery rule modifications. Any alterations to March delivery procedures signal the exchange is managing stress. Trading halt provisions. Any warnings about potential halts suggest the exchange anticipates extreme volatility. How to check? Go to the CME Group website, navigate to the advisory notices section. Check at 6 p.m. Eastern when GlobeX opens. Check again at 8 p.m. Check before bed. Check the moment you wake up. If the CME publishes anything unusual tonight, you need to know immediately, not Tuesday morning tonight. The margin weapon succeeds because retail doesn't see it coming. Seeing it coming is your protection. Let me explain what institutional positioning looks like during overnight sessions, because recognizing these patterns helps you anticipate Tuesday. The accumulation pattern: price dips modestly on light volume, tests support, volume picks up on bounces, higher lows form. Institutions are buying the dips, building positions before a markup. This pattern tonight points to a Tuesday gap higher. Institutions are positioned long and want higher prices. The distribution pattern: price rallies slightly on light volume, tests resistance. Volume increases on declines, lower highs form. Institutions are selling into rallies, distributing before a markdown. This pattern tonight points to a Tuesday gap lower. Institutions are positioned short and want lower prices. The trap pattern. A sharp move in one direction triggers stop losses, then reverses violently. Volume spikes on the reversal. Institutions triggered stops to take the opposite side. This pattern tonight suggests Tuesday volatility. The overnight direction was a fake out, and the real move goes the other way. Watch the pattern develop tonight. The first 2 to 3 hours of GlobeX frequently reveal institutional intent. The price action tells you what they're planning for Tuesday. Let me outline the most likely Tuesday scenarios based on tonight's positioning. Scenario 1, bullish breakout. Overnight action, $76 holds. GlobeX gaps above $77.50. The Shanghai premium expands. Gold breaks $5,000, and volume is heavy on the buy side. Tuesday morning opens above $78. The first hour confirms direction with aggressive buyers. Tuesday target, $80 by close. Gamma squeeze potential if $80 breaks, with options hedging driving mechanical buying. Probability, 40% based on current conditions. Scenario 2, bearish breakdown. Overnight action, $76 breaks, GlobeX gaps below $75. The Shanghai premium narrows slightly, the dollar strengthens, and volume is heavy on the sell side. Tuesday morning opens below $75. The first hour shows failed bounce attempts with aggressive sellers. Tuesday target, $72, $73 by close. Fibonacci support test with potential for capitulation selling. Probability, 25% based on current conditions. Scenario 3, consolidation grind. Overnight action, $76 holds, but without conviction. GlobeX is flat to slightly higher. The Shanghai premium holds steady. Volume is light. Tuesday morning opens at $76.50, $77.50. The session is choppy with no clear direction. Tuesday target, $77 to $79 range. A battle between bulls and bears that remains unresolved, setting up Wednesday for the decisive move. Probability, 35% based on current conditions. The highest probability outcomes are the bullish breakout or consolidation. The setup tilts higher, not lower. But the bearish scenario cannot be ruled out. March delivery uncertainty creates two-sided risk. Let me explain why this week's options expiration influences Tuesday and why tonight's positioning is relevant. February options expiration falls on Friday, February 20th. The current options landscape, massive call open interest at the $80 strike with thousands of contracts, significant call open interest at the $85 strike with substantial positions, and put open interest concentrated at the $75 and $70 strikes. How this influences Tuesday. If price approaches $80, market makers who sold those calls must hedge by buying futures to offset call risk. This purchasing pushes price higher toward $80, requiring more hedging, generating more buying, a positive feedback loop. This is gamma squeeze mechanics, the options market driving the futures market through hedging requirements. If price falls below $75, market makers who sold puts must hedge by selling futures to offset put risk. This selling forces price lower toward $72, requiring more hedging, generating more selling, a negative feedback loop. Tonight's positioning determines which feedback loop gets activated Tuesday. If the overnight session establishes bullish momentum toward $78, Tuesday approaches $80 and the gamma squeeze potential activates. If the overnight session establishes bearish momentum toward $75, Tuesday threatens $72 and the gamma collapse potential activates. The overnight session isn't merely about price. It's about which options mechanics get triggered Tuesday. Every overnight session now unfolds within the context of the March delivery countdown. First notice day is February 27th, 10 days away. Current March open interest exceeds 400 million ounces in paper claims. COMEX registered inventory stands at 98 million ounces available for delivery. The coverage ratio is 4 to 1. How this affects tonight. Large traders holding March positions are making decisions now, not on February 26th. Those standing for delivery are ensuring positions are properly documented, accumulating if they want additional exposure. Those rolling to May are initiating the process, selling March, buying May. Those planning cash settlement are designing exit strategies, timing sales for optimal execution. Tonight's positioning partly reflects March delivery decisions. Large traders positioning for the delivery window are acting in overnight sessions where their size is less conspicuous. If you see heavy buying tonight, some of that is March delivery accumulation. They want physical metal and they're making sure they get it. If you see heavy selling tonight, some of that is rolling or closing. They're reducing March exposure. The March countdown injects urgency into every session between now and February 27th. Tonight is no exception. Let me provide you with specific actions for tonight, what to check and when. At 6:00 p.m. Eastern when GlobeX opens, Check CME advisory notices for any margin changes or unusual announcements. Note the GlobeX opening price versus today's close, gap direction. Check the dollar index DXY direction from the 97.0 level. At 8:00 p.m. Eastern, check Shanghai's opening if accessible through data services. Note whether the Shanghai premium is expanding or contracting from $11. Check GlobeX price action. Is a trend developing or is it choppy? Recheck CME advisories for anything published since 6:30 p.m. At 10:00 p.m. Eastern before bed, note the GlobeX price and whether 17C26 support is holding or under threat. Check overnight volume, heavy or light. Note gold price correlation. Final check of CME advisories. At 6:30 a.m. Eastern when you wake up. Immediately check CME advisories for anything published overnight. Note the GlobeX overnight range, high and low. Check Shanghai's close and premium status. Assess which Tuesday scenario is developing. Set alerts if necessary. Check at these times. The information you collect tonight shapes your Tuesday preparation. Let me speak to those holding physical silver versus paper positions. Physical holders, tonight doesn't demand your attention. Your metal sits in your safe regardless of what happens on GlobeX. No overnight gap affects your holdings. No margin call endangers your position. No CME advisory alters your situation. You can observe out of curiosity, but tonight's activity doesn't require your response. That's the physical holder advantage, entirely outside the paper game. Paper position holders, tonight matters significantly. Your futures contracts, your ETF shares, your unallocated accounts are all subject to overnight moves, gap risk, margin changes, and exchange rule modifications. If you're carrying paper through tonight, recognize that you're exposed to movements you cannot respond to in real time. The overnight session occurs while you sleep. By the time you wake, it's already history. Consider whether that exposure aligns with your risk tolerance. Some traders close positions before extended closures and overnight sessions, specifically to avoid uncontrollable gap risk. It's Monday evening. President's Day is ending. America is settling in for the night. But in a few hours, CME GlobeX opens. Asian markets assume control. Shanghai establishes physical market direction. The overnight session determines Tuesday's setup. Something is being positioned tonight. The patterns echo February 10th, 12th, when the flash crash was engineered. The thin liquidity conditions persist. The margin requirement weapon could be deployed again. I'm not forecasting a crash. I'm not forecasting a rally. I'm alerting you that tonight's session matters, that tomorrow could be explosive in either direction, that the setup is unfolding while America sleeps. Watch the signals. Shanghai premium, GlobeX gap, dollar index, gold correlation, volume profile, CME advisories. Check at 6:00 p.m. Check at 8:00 p.m. Check at 10:00 p.m. Check at 6:00 a.m. The informed survive. The unaware become liquidity. $76 is the line tonight. Tuesday's trajectory hinges on whether it holds or breaks. The decision is being made in the next 12 hours. Be ready for Tuesday, because Tuesday is being shaped tonight. Verify everything. Trust no one. Protect your capital. WFH Money DecodeX. Until next time. Next.